the stock that everyone is seeing this morning, biggest drop since their listing from Honasa. And weak numbers is what has caused it. Hiral is joining us with a deep dive on what really has caused the Honasa stock to really flatline this morning, Hiral.
Absolutely. If you see in terms of Honasa, we started off with whether it is losing its glow. It's lost its glow. That's what we can say in today's day of trade. What's gone wrong? If you quickly look at the operating revenues, that has declined and the company has slipped into losses. If you talk about the numbers, a 19 crore loss versus a 29.4 crore profit, that is what we're looking at number 2 in terms of a year-on-year basis. Moving on, if you see the trajectory, no pretty trend that we've seen. It just bumped up in 23 and 24, but again, it started to decline in the last 2 quarters with regards to revenue, and it had a loss in FY21, then a loss in FY23, and now back in Q2 FY25, the company has reported a loss of around 18.5 crores. Now, what has impacted Mamaearth? Couple of reasons. First, Project Neve has impacted both the top line and the bottom line for the second quarter. And with regards to Project Neve, what is it all about? This is about the inventory pipeline correction they had undertaken. And the strategy was mainly to bump up their offline distribution because it has always been an online seller. Now, the shift from a super stockist model to a direct distributor for general trade, that is something which has not really worked well for a Mamaearth. Moving on, if you see in terms of the offline distribution restructuring exercise that Honasa has undertaken, to be noted, offline channel contribution has actually increased to 35% in the current year in 24 from a 9% in FY20. Now, an online distribution brand moving into offline without probably the know-how with regards to strategy, that is one of the major gaps. They've seen an exceptional one-time general trade inventory take back worth 63 crores. So this is what has actually hit the bottom line as well this time around. And very lastly, you have your quick commerce players which are actually making a lot of noise, from the likes of a Blinkit to a Instamart to a Zepto, who are onboarding a lot of new brands, right? And this is what is actually hitting them from a perspective of competition. So online and offline competition is on the rise for a Mamaearth. Lastly, what is not working? Firstly, they used a specific strategy to scale to the 1,000 crore mark, but now that is something which is not helping them go beyond that. So the strategy has gone wrong. Their product lineup and design is absolutely not working right now. That is what they have been indicating as well, which they are going to rework. And their marketing approach, which was absolutely influencer driven, has probably backfired. Lastly, the investment allocations that they've made, right? So initially they started investing across, say, 15, 20, 30 brands. Now they've realized that they need to make investments to a smaller group and start bumping that portion, that category, and not be available across categories. Very lastly, if you see about their media mix that we spoke about, absolutely influencer driven. The moment the influencers go away and shift to another brand, interest is absolutely lost. Now, let's look at what the management is saying. Firstly, they've owned up to their faulty strategy from what comes up from here. They've said that Mamaearth is growing slower than expectations. Secondly, the company has identified structural changes which they are making, and this is mainly to bring back the growth trajectory soon. And lastly, an important one, what got the company to 1,000 crores will not take us beyond 1,000 crores. This is a major statement that is coming in from the management as well. Now, this change in strategy, is it for the betterment of the investors? Because it seems it's an absolute wealth erosion that has happened so far. 30% in the last 1 month. If you see from its 52-week high, 85% down from its 52-week high. So clearly, at the cost of investor wealth, we've seen changes in strategy, which is again on a trial basis right now. And the stock has already fallen below its IPO price now. So what happens from here on? I mean, what will an investor who's actually invested during the IPO do? The company had actually projected 24,000 crores in terms of valuation in the DRHP. Now that puts a question as, is the risk reward unfavorable now? Because at the time of the IPO, it was pegged at around 10,000 odd crores. The current market price was around 12,000 odd crores, which has now, after the 20% fall, come down even further, right? So that is a key question that we need to check from here on as to what happens. The key questions are, should Honasa remain an online brand and not venture out into offline, because that's not their game? Secondly, does the management actually lack this experience and expertise in offline trade? Because if they don't know how to go about the offline trade, and this is the kind of wealth erosion that investors are going to see, it's absolutely not really a good thing to do. And very lastly, will the model favoring direct distribution help? Lot of questions that the management needs to come out and respond to at this time after the kind of fall that we are already talking about. But is Honasa losing its glow has now changed to Honasa has already lost its glow today.
All right.